Hi there. This is Natasha, and I am so glad that you joined us today. So, you tuned in because you are a first time home buyer. And I have with me today one of my preferred lenders, the preferred lender in the state of Georgia. Yes, none other than Mr. Bryant Mormon. Hey, Bryant, why don't you introduce yourself and tell people about it yourself first?
Tasha, thank you for the warm introduction. Hello, everybody. My name is Bryant Mormon. Been a licensed mortgage loan originator for nearly a decade, originally from the wonderful city of Chicago. You can find me.
Shout out.
Yes, you can find me on Instagram at Mortgage Pilot. A little bit more about me. Like I said, I've been doing lending now for approximately 10 years. I work for a brokerage called AMP Mortgage, where we have over 20 different lenders that we work with in order to be able to get you the best possible deal at the lowest possible rate with the best possible programs.
So I call Bryant and Amp my pinch hitters. They have really come through for me in multiple occasions. And so if you are trying to purchase a home for the first time, you need to know what to do. So we're just going to kind of go back and forth and talk to you a little bit about purchasing a home. So what is the first step should a first time home buyer should do when they're looking at a home?
First thing is take a peek at your credit report. Secondly, you want to look at what assets you have in the bank. And then third, you want to look at your budget. And really, you should be doing all three of those things at the same time.
So they shouldn't just go out there and start looking at $1 million homes.
No. I would not just. I mean, now if you've got $20 million in the bank, we'll look at $1 million home. But even millionaires still budget.
Absolutely, and that is the key. A lot of times, I'll get calls from people like, "Hey, I just want to see this house," and I go, "Hey, well, is that your budget?" And what we don't want you to do is get disappointed by going and looking at a home and you really don't have the funds to actually afford that. So is a first-time home buyer someone who's just never bought a home before, or can they be considered someone who's bought a home but they bought it a long time ago? And what's the time frame for that?
The official definition of a first-time home buyer is somebody that has not had ownership interest in a house in the last 3 years.
Yep. And that's key because sometimes you may have had a situation in past where you either had to sell, you may have gotten a divorce or something, and it's been a while since you purchased a home. You can still qualify for some of the first-time home buyer programs, which we're going to talk about later here when you're looking to purchase a home. So how much money do you need as a first-time home buyer really to buy a home? Do you need like $100,000?
You mean in real money or Monopoly money? Just kidding. To give you a rough idea, if you're a first-time home buyer, like you were talking about, there are a couple of different programs, which we'll go into detail more later. But typically, you need 3 to 5% of whatever the purchase price is for your down payment. And then you also have these things called closing costs, which we'll get into a little bit later as well. But I would say a good rule of thumb is to take whatever the purchase price of the house is, multiply it by 8% on the calculator, and it'll give you a pretty good idea of about how much you might have to bring to the table.
So now that this is a good segue, can you break down closing costs? Because I think sometimes even for buyers, when they're looking at closing costs, even for VA, even though VA is 100% financing, they still have closing costs. What's involved in closing costs?
3 main things with your closing costs, especially if you are closing in the state of Georgia. You have your escrow setup, which is your property taxes and your homeowner's insurance. Just to let everybody know, when you're making a mortgage payment, you're paying principal and interest just like anything else you might finance. But you're also paying a portion of your property taxes and a portion of the homeowner's insurance so that those can be paid every year. So you have your escrow setup. You also have your attorney fees. So in the state of Georgia, you have to have an attorney that presides sort of over everything. And what that attorney will also do is run what's called a title search. So we all love those Carfax commercials. They're kind of funny. And then the third thing is going to just be you got some administrative fees and some taxes.
Yep. And those are all important. They're non-negotiables basically when you're purchasing a property. So let's talk about kinds of loans. What are the best type of loans do you see out there for first-time home buyers? What kind of loans do we have available to them?
It really just depends.
Okay.
Certainly, I mean, the veterans, they have the VA loan, which you don't have to necessarily be a first-time home buyer, but they are not required to pay a down payment. So it is one of the better loans that are out there. The rates are competitive. And again, no down payment. So a lot of my VA buyers are bringing maybe $5,000 or less to the table most of the time if they can get some seller paid closing costs. Conventional financing will allow you to do as little as 3% down if you're a first time home buyer. FHA will let you put down as little as 3.5% of whatever the purchase price is on a down payment. And then you also, if you were interested in purchasing a home in say a rural area, USDA has some programs with as little as 0 down for the down payment.
And that's exciting for a first-time home buyer. And this process can be overwhelming when you're purchasing such a huge asset, right? You're spending hundreds of thousands of dollars on a property. And if you don't know the process or partner with the right people, you might mess up. Now, do you think you need 20% down, though, to purchase a property?
Absolutely not.
Yeah. So you don't need to save up $100,000 or two. Well, it depends on what kind of property you want to buy to really purchase for the first time. So what's the difference between the pre-qualification and the pre-approval? Talk to us about that.
Sure. A pre-qualification is just a conversation. You, me, and a customer sit down. We have a conversation about what their goals are, what their budget might be. It's stated. You tell me how much money you make. You tell me what you think your credit score is. Versus a pre-approval, which is what we do. We don't issue letters or pre-quals around here because we want to make sure that we are protecting you and also not wasting your time. So with that pre-approval, we're going to pull a copy of the credit report. We're going to ask you for your income documents. We're going to also ask you for your asset documents and any other documents that we may need, just to make sure, and more than anything, that helps us to make sure that your approval is solid, to make sure that any hurdles that we might run into, we want to try to solve for those first.
Let's talk about credit, because a lot of times people are like, well, I don't want to pull my credit. And so sometimes lenders can do a soft pull before they actually do a hard pull. What's the difference? Does it negatively impact your credit? I think that's the biggest hurdle I find with people when they want to start the mortgage process. They've been working on their credit for some time and they're afraid to actually pull the trigger because they're like, well, suppose my credit goes down. So talk a little bit about that.
I would say if we're a year out, 8 to 12 months out, and you want to just make sure that you're okay, I think a soft pull makes sense. That'll allow us to get a pretty good idea of where you are credit-wise, and then certainly we can do a credit analysis to give you an idea of maybe you need to pay a credit card down or address a collection or things of that nature. However, if your credit report's good for 120 days, so if you're in a situation where your lease is going to be up in 2 months, we need to go ahead and just pull a regular copy, a traditional credit report. And then if we do need to do some analysis around that, we can. So
let's talk about what advice would you give buyers that are worried about interest rates? Because that seems to be the biggest thing right now, too.
At the end of the day, you don't want to be house poor, right?
Yeah.
We hear like the elders in our community say, you don't want to be house poor. So I would say if you can afford the payment, then let's look into possibly purchasing. If you feel like you can't afford the payment, then maybe you should wait. But we are, for instance, if you're paying, let's just say you're paying $2,500 a month for rent. And you're like, hey, Bryant, Natasha, I can afford this $2,500. I'm managing it just fine. So why not look at it? Can we look at a house that's in that $2,500 to maybe $2,500 to $2,800 a month range? And I think it maybe makes sense.
Yeah.
But yeah, we never want to put somebody in a space to get a house if they're not actually ready. But certainly equity and things like that.
And the interest rate also depends on your credit, right? Because the better your credit report, your credit score also will adjust the rate. And then market rates vary according to what's going on in the market and things like that. So we look at all those factors that we don't prejudge based on a simple equation. It's not as simple as people make it out to be. You do want to have a lending partner that's going to help you navigate that successfully. So what are some of the financial mistakes that some first-time home buyers had? We had one just a second ago. Somebody just called you the day before close to ask a question. What was that question?
They asked if they could buy a car.
No, you cannot. Why not?
When we send you over the pre-approval letter, it's based on what's in your credit report. It's based on the job that you currently have. It's based on the amount of money you have in the bank or will have. So if you go and you add a vehicle, you add a credit card, you add a personal loan to your credit profile, then that could jeopardize your approval. So once we actually issue you the pre-approval letter, you want to refrain from opening up any new lines of credit. If you think you may absolutely need to do that, then reach out. Now you can certainly apply for utilities. I mean, you calling Georgia Power is not going to make a difference. But certainly, if you're thinking about any credit cards, personal loans, or vehicles, certainly you want to let us know.
Don't do it. Don't do it. I send you out a 10 commandments of what not to do once you go under contract. And I really go over that when we do our buyer consultation. So what documents do they need to get started? What are some of the things you need to do when they make that call to you? What should they be prepared to hear that you're going to ask them for?
Couple of things right quick. Just also wanted to say, be mindful of moving a lot of money around. It may be easy for you to hop on a phone and transfer money between this account and that account. However, we then have to source that. So you want to be mindful of kind of keeping the money where it needs to be and not a lot of unnecessary transfers. But to give you an idea from a documentation standpoint, if you are what we call a W-2 employee, we would ideally need your W-2s from the last 2 years, the last 2 pay stubs, and then your asset statement from the money, wherever you're going to pull the money from for the last 2 months. If you are self-employed, we are going to need your tax returns from the last 2 years. In some cases, we can use 1 year, but as a general rule of thumb, 2 years worth of tax returns or 2 years W-2s.
Okay. And one of the other things I thought about too, you can get money for a down payment for things like your 401k. You can have gift funds. I know when I first bought my house, because a time ago, probably a long time ago.
I thought that was just 5 years ago.
I know, because I'm only 35, right?
Exactly.
I got gift funds from my parents, and that was such a blessing. So you can get gift funds from a parent or, to help you with that down payment. So if you want to reach out to Brian, how do people reach out to you, get in contact with you?
Easiest way to get in contact with me is to find me on Instagram at Mortgage Pilot. Send me a DM. Happy to help. And you can also reach me on my cell phone, 773-844-6765.
Awesome. And I'm always here. I'm Natasha Ewing-Johnson with Epique Realty and the All Points team, always helping you making your next move your best move.